Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is May 17th, 2022. May is over half over. We are rolling into the summer. Again, first day in I don't know, like a week, I feel like here that the sun is actually out. There's no threat of rain. Everything is waterlogged. It should be a fun week. Finally, we're going to get a little bit of a break. So hopefully you guys are in the same scenario. I know my friends down in Texas are having issues with rolling power outages. They've been getting some nasty wind down there. So I hope everybody is staying safe around the U.S. and anybody abroad that is watching us as well. So let's just jump into things today. It's been I'd say, I want to say chaotic, right? But chaotic is the best word that I could use for it. But it's definitely been a lot of movement, and then things have kind of slowed down to a more kind of normal pace right now, as everybody is trying to figure out what the heck happened this morning from 1 o'clock on. Got some very interesting comments. A little bit of a change in stance from our buddy Bullard, but and again, he's made some comments which are kind of like, did they find? Is he no? Has he been replaced with a clone? Like, has the evil alien clone replaced our Bullard that we love? So, yeah, I don't know how that. We'll see. But anyway, for those of you that are new, welcome. Every week we have some new people. If you're wondering who I am and why I do these presentations, I'm not an employee of Nadex, just so everybody's clear about that one. I've been doing these presentations now for over 5 years. I actually have done various things, analysis sessions. I've written articles for Nadex. I've been, kind of one of the co-hosts or the headliners for their education summits as well. I am part of the morning show, Morning Market Movers with Todd, Rich, and we broadcast that every morning live on Nadex from 8:45 to 9. So, although not an employee, definitely ingrained and been around, and I consider, I guess at this point, I'm probably considered part of the family of Nadex. And again, I consider them the same way. So, I've been trading since about 1999, so quite a long time. I won't tell you how many years. You can do the math on that one. So, seen a lot of ups, downs, sideways, left, rights. Things that we've never seen before. Really seen it. The markets go from an age of basic technology. It was like, oh, is there an online thing? What does AOL dial-up sound like? From that time frame to really where we are right now with instantaneous transparency and lightning fast, high frequency trading and everything else. So kind of come through, in the craziest times of the market. I started with stocks and additional options, like many people do. Found foreign currencies, fell in love with it. Learned to trade futures years later. Um, Spent some time on the inside as well. When I say the inside, this is not like prison. Like, this is not like the yard, right? When I say the inside, I mean I was actually in the financial services industry. I was an advisor for one of the big three banks. Spent a little time there. Got a great education in things that people from the outside you would have no idea even existed. Really kind of really opened my eyes to a lot of different things out there. Learned a whole lot about bonds. I got to actually go to the company's trading floor where all the trades are processed for this, the big bank. And it was unbelievable. If one little corner was stocks and everything else was bonds. And I was like, are you kidding me? There's this many bonds? I had no idea. I didn't realize how big of a player it actually was. So it was a great education. I can say that I did work on Wall Street, not on the exchange, but on the actual Wall Street itself. I actually lived in the financial district for 2 years. I lived 2 blocks from the New York Stock Exchange, actually right across from one of the Trump buildings there, and used to walk past it every morning. Got to see all the fancy lights, the IPO releases, and whoever got to ring the bell that morning got the awesome experience. Awesome experience. Got to hang out, go to happy hour with floor traders. Got to train some floor traders. Pretty exciting time. So. Uh, my style of trading is not, I would say, different, but I'm not very indicator based. You guys will see today I got a lot of horizontal boxes. I will throw some fibs on charts just for kind of confirmation to what my trading style is. And again, I know a lot of people like the fancy stuff. I like to keep things as simple as possible. I'm a big believer in the KISS mentality. The keep it simple part, not, not nothing more than that. But again, I will throw some indicators on there, just so you can see kind of what kind of the average person is looking at, right? It's always nice to know what the masses are doing because you typically want to do the opposite of them. I've written a number of different trading strategies. I created an entire program called the 30-minute trader. I've done 5-minute binary courses. I've done news breakouts, parabolic moves, high volatility trading. I do a weekly newsletter for students. So again, done a lot of things in the industry. I absolutely love doing this with people. If you guys want to ask any questions, you're more than welcome to. At the end, I'll actually give you my email address. If you guys want to email me, you're more than welcome to email me with anything that I didn't cover today, or you wanted kind of a clarification on. Right? Sometimes I'll say things and people are like, "What does that mean?" Right? You said Harry Potter. What do you mean by Harry Potter? You know, so I have different terminology of things that I will kind of bring up and mention. Um, so with that, again, this picture is absolutely old. With COVID, we couldn't get new family pictures. I actually don't know how old Jen is in that picture, but she's almost 4. She'll be 4 in less than a month. She's got, her birthday is June 2nd, and she's already telling me every day, it's, Daddy, this is what I want for my birthday. So looks a lot different than that. The boys are actually as tall as Melissa is now. So yeah, and again, I've appeared too. So I've aged since this picture as well. Anyway, let's go to the disclaimer so we can get into the charts a little faster. The Nadex risk disclaimer for today. Again, many of you have heard this before. If not, if this is your first time, and this is not just for today's presentation. This is really any type of education content that you ever get. This is how you should kind of take it and consider it. That again, any type of trading in general, but trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost to end of their transaction, including fees. Now, carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC. That's a name that you may be hearing a lot lately. The CFTC is kind of at the forefront for the regulation of all the cryptocurrencies. And then speaking of that, Nadex is a registered trademark of the Crypto.com group. It's no longer, again, if you guys didn't know, IG obviously is no longer in control or the owner of Nadex. Crypto.com is. Down the road, I think there's going to be some really cool things. Again, Crypto.com is a very large company, very interested in helping expand Nadex to more places, and actually, hopefully provide more offerings for us that we don't currently have. Again, it's always great when someone as big as they are really motivated to help a product succeed. So very excited about the future of that one. And again, if you're new here, welcome. Again, well, let's roll into things. So the agenda for today, as always, is we're going to cover the upcoming news events. We had some news. We had retail sales this morning. There's a big one tomorrow morning for the UK. CPI 9.1% year over year is kind of what the current kind of the current forecast right now, which is absolutely just monstrous. And if you guys don't know anything about CPI, I understand that that's the consumer price index. It's a gauge of inflation, and all the central banks kind of have a similar mandate, right? The mandate is to get around 2% inflation. That's considered what's healthy. That's why every year when you guys, for those of you that have jobs out there, that are not working for yourselves, if you're working for somebody else, you have that annual performance review, and it's kind of like, well, how much of a raise did I get this year? That's so you can stay with the kind of cost of living adjustments. It's pegged around 2. 2 is considered healthy. 9.1 in a year, not healthy, right? That's like saying, you know what? I love the South Beach or the Atkins diet, whatever the one where it was like no carbs, but you can eat a ton of bacon. Yeah, eating your weight in bacon every single day, yeah, it becomes excessive, right? 2%, not bad. 9%, not healthy. So yes, I'm sure I'll get an email about that one and be like, no, Mr. Atkins said this. No, I know, I didn't do it. That was not me. I don't, I enjoy bacon, but I don't eat it all the time. So I don't eat my weight in bacon every single day, especially with the inflation cost that it is now, right? I would need to take out like a mortgage on my house to, fund 1 week of bacon eating. But we'll cover the upcoming news events for the rest of the week. After that, we will cover indices. It's a green day. It's a green day. Yesterday, it was quite the opposite. Today, it's volatility off, risk on, everybody and their brother. It's funny, the retail sales numbers and all the news articles are like, oh, this is guaranteeing interest rate changes. Yeah, crush inflation. But the markets are like, I don't care, right? And we're going to talk about a comment that Bullard made, which I was kind of like, all right, this is why I feel that he has now been replaced with an alien. And again, I don't think Bullard listens to the program, but I feel like Uncle Warren does. Uncle Warren, please help us out here. Our one rock, as far as controlling and getting this inflation under control, just made comments today about how, the market's overreacting. The market doesn't overreact. The market is what it is. We'll cover indices, and then we're going to cover forex. Forex, monstrous moves today. The pound just, I mean, it was plus 300 at one point today. Enormous movement today with actually lack of no news. So it's kind of an interesting, and again, some of it may be preparing for tomorrow, but huge movement today. Absolutely monstrous in currency. So we should be looking for some reversals there. And then we'll cover commodities. Oil. I hate to say this, but oil was up earlier today at 115. It's finally pulled back a little bit. I mean, again, there's some profit taking because it did go crazy, but we were at 115.50 earlier today, right? We're just rolling into the Memorial Day weekend. It's getting real close here. And yeah, 15.50. Um, Gas prices where I live in Maryland, I filled up actually on. Didn't fill up. I just needed a little bit because again, I typically try to buy things at Sam's Club. A little cheaper. It's normally 10 cents cheaper at Sam's Club, but I couldn't. They closed at 7, and I got there at 7:04, and man, they turned the pumps off, which drove me crazy. So I had to get gas on the way home. I paid 4.44 on Sunday night. This morning when I drove past the same gas station, it was 4.54. So 10%, or not 10%, 10 cent increase in 2 days. And oil's still going higher today. So we'll see if it gets even higher as we get close to summer gas time. And then again, we'll talk about the play in gold and silver as well. Okay. So with that said, I don't think is there anything else. No, that's probably it. That's all we're going to cover today. I was trying to see, is there anything else I wanted to add with that? Sorry, guys. I'm just looking at my notes real fast. No, 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 no. That's it. Okay, cool. All right, let me click this button. One sec. This is the problem with having multiple monitors. Kind of move things around. Right there. That's what I'm looking for, and right there. All right. So before we get into the news events for the day, let's just kind of look at this top section real fast. We talk about currencies, again, not a pure currency based channel, obviously, but the pip change in 24 hours shows you how much movement is there. These are monstrous numbers. 203, 286. This was up in the 300 range about a couple of hours ago. It's finally starting to pull back and settle down a little bit. Euro pound down 54. Nice move there. Dollar Swiss down 101. Euro dollar up 118. I mean, right now it's pretty much beat up on the dollar across the board, no matter what it is. Aussie dollar, dollar yen. Dollar yen is the only one holding firm, and it's kind of a battle of who could be the weakest today. Yeah. So this is what we've had so far this morning. We had Powell speaking at 2 o'clock today. He's starting his second term, and it's funny that Powell starts second term with the greatest challenge yet. Yeah, I would say so as well. I don't know if it's the greatest challenge, but it's kind of, I don't know. They've done a lot of things that have been wrong, and they're not willing to admit to it, and they're kind of, I don't know. They're kind of barricading themselves in and basically just playing with blinders. Like, no, 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 the economy looks good, and look at this. But the reality is, we're seeing 40-year high inflation, and there was 1 month where it kind of pulled back a little bit. But retail sales is going well. We know overseas and globally, there's other factors out there that are driving new inflation, and yeah, and then it's kind of a weird, weird scenario. And then Bullard spoke this morning, and there's some comments out of Bullard. I had it up top. Let me see. Where is he? This is a kind of a scary comment, and here's why. So Bullard has been very hawkish, very aggressive on controlling inflation. He talked about how we needed to start doing it last year. We needed to stop it before it got this far. Because, I mean, the truth of it is, once prices get high, how often do we see the prices go back to normal? Like, we're joking about what the prices of, oil is right now. We're joking what the food prices are. It's like once you get used to spending $2 a gallon for apple juice when it was 99, do you think it's ever going back to 99? No, it's very rare that prices ever go backwards like that. Bullard made comments basically earlier today that a 50 basis point increase is coming at the next meeting, and that's a good base case for now. He was the one all about we got to go fast, we got to go 0.75. He wanted to go even high, he wanted to go one on the first one, 0.75, and now he's starting to temper it down to 50 basis points. He was kind of the driving factor of sanity out there, and now it's kind of like, yeah, we'll do like 50. I mean, that's a good base case for now. I mean, I'm hoping he doesn't drop down again. Like I said, other presidents, I think that the general consensus is 50, and now he's starting to temper. And again, this line, you could have replaced Bullard with any other person there, and that would have made sense that they said it. It doesn't make as much sense as him saying it. Now, these are some other things. This is the first one that, honestly, again, the Fed is not as far behind the curve judged by market pricing. I think he's totally off here. Again, he makes these comments, the market just takes off today. And again, market pricing, you know, I don't think that his statement saying that the Fed is far off. I mean, I think, as of right now, I mean, he's saying that these increases in market rates for treasuries, home mortgages show that the Fed is not far behind the curve as it might have thought. Um, I guess it just goes to show like everybody knows it's going to be bad. I mean, home mortgages now are over 5%. They're talking about maybe 6% down, and we've only had one rate rise. We haven't started to control inflation whatsoever yet. Maybe what he's trying to portray is like, oh, listen, we've already seen these things skyrocket because, uh, you know, we just started raising a little bit. But the reality is, the UK has been in 5 months of raising every single time, 0.25. They're at highs. They're in like the worst economic, kind of situation that they said they've ever seen themselves. Their inflation is at 9.1%. It's not quite ours is not quite that high yet, but it's at 9.1%. And they've been doing it for 5 months. We've been doing it for two. And it's not getting any better. It's only getting worse. So it's kind of one of those things. It's these comments kind of scare me. I mean, basically saying that, the Fed, the market says we're not far behind. No, I don't really think that that's what the market's saying. I think that people are just, they're kind of getting shy, right? But the Fed should be prepared to manage inflation on its own. If pace of prices moderates naturally, then Fed can do less. Um, Again, the Fed should be less reactionary, more proactive. And again, he was the voice about we need to get on this fast, right? Because remember, the inflation partially is here because we kept quantitative easing on so long there that they are the true root of it. It's nice to kind of point that somewhere, push that, point that finger somebody else. But um, and the first comment, Bullocks. Dear Fed, you've been printing money for so long now that you've forgotten that you caused the inflation. See, I just kind of talked about it, but I'm not the only one. And FX Sport, by the way, is not me. You can see I am Brian FX on here. So, yeah. So everybody knows where it comes from, and this is kind of the blinder effect is what scares people. Um, but retail sales, we'll see what Powell has to say. Messer speaking later today. We have some wage price indexes. Again, if you're unfamiliar with these this is a leading indicator for consumer inflation. Everything is consumer inflation based right now. That could be a nice little market mover tonight at 9:30 p.m. Tomorrow, again, remember tomorrow is Wednesday. We have our oil inventory report, right? We get our API report today. So, yeah, yeah. And we have CAD inflation. Okay, now CAD's month over month number is still rising. Their year over year number 2.9, again 3.9, 4.7. They still have a two mandate, so they're still a little bit high. Um, Again, not quite as bad as the UK, but they just kind of started to do some raising, and again, different countries, a little bit off. But again, the month over month number, it's not it's slowing, but it's still continuing to rise. So all these numbers are going to get worse. And then we have employment in Australia tomorrow, which again, another good release. It's two 9:30 p.m. Readings in a row, so you got to love that. And oil inventory. Now remember, oil. Here, I'll just pull it real quick. For those of you that missed oil last week, just so everybody understands, oil is was up at 115 earlier. Oil inventory last week, we had a surplus of 8.5 million barrels. That is a lot. Okay, that is a lot. Okay, and we're at like a couple week highs at this point in oil. So I'm not saying that this is going to happen. And if it does, it's just one of those things that we're just, a coincidence, right? I don't have a crystal ball. I don't know the inside reading. What if we have a big down draw this week, right? Because a lot of times when we see major surpluses, they're like, oh, we got to turn this pump off, right? We got to turn the supply feature off. And then the next week, you tend to have kind of a negative number. What would happen this week if we had a minus like 6 million or a minus 4 million barrel surplus, right? Or, I'm sorry, a deficit, right? What if that's the drop, right? I mean, we don't have a forecast yet. They're not giving us that forecast. But could you imagine if we had like a 3, 4, 5 million barrel deficit last week and we're already at 115? We could be getting up into the 117 range, 118. God, I hate to say 120. And and we're not even hearing headlines out of Russia anymore. And if we can get back up to 120, what the heck does that look like for the rest of the summer? There was some news out of OPEC this morning talking about, production was 2.6 million barrels per day below the required level in April. Again, showing us that we're not producing as much. Again, lower supply on that one. Russia produced 1.28 million below the required amounts. And again, this is, according to OPEC plus secondary sources. Compliance with the cuts rose to 220% in April from 157 in March. So again, not as much as being produced as they were before. And it makes sense if people aren't buying it from them. Russia's kind of, not trying to get stockpiles and stockpiles and stockpiles. They're trying to manage it as well, But again, if there is, less being produced, that means there's more demand on there. That means prices are continuing to rise. So, yeah, then there's that, right? Then there's that. All right, so that's tomorrow. Again, Thursday, we do have some data. We have Philly Fed. Let me make sure everything on. Yeah, we do have Philly Fed. Again, the New York Fed, the Empire State, was horrible. It was a negative number showing deteriorating conditions. It was at -11. The Philly Fed has been a little bit more insulated, so it's been a better gauge, right? A better gauge. Unemployment claims, again, it looks like we're back to the 200. We were down in the 180s. Now we're back in the 200s. Eh, what does that mean? It doesn't mean a ton. Right now, the biggest problem with the economy is that they are, and again, you get this in the JOLTS report. There's 11 million job openings, but only 5 million people looking for jobs. So again, there's a bit of a difference there. When the economy gets bad enough and the JOLTS numbers come way down to match, that's probably going to be more of a realistic gauge of when things are back into normal ranges than what the Fed is doing. And then existing home starts, again, not necessarily the biggest mover for our markets, but it'll be some. Then we go into Friday. Now Friday, we have retail sales for the pound. Month-over-month numbers are expected to be negative. Not as negative as the month before, but still, again, another negative number. And again, we've heard from the UK, spending habits have changed. Inflation is getting out of control. They're saying that, at this point, Daly is saying this is the worst situation he's ever seen, with, high inflation, GDP already crimping back down again, but inflation continuing to rise. It's just a horrible combination of events. And again, retail sales, again, people not spending are only going to exacerbate the problem. Okay. In the United States, we are technically still spending, although the retail sales numbers for today were a little bit mixed, right? We got one green, one red. Both of them were previous changes before, which is positive. But we're still buying, but eventually we'll get to a point where it's like, I got everything I need. I don't need to buy anymore. And this is going to come back as a horrible number. So, again, what is the deficit? What does the debt look like? How much are people accumulating now by continuing to purchase at prices that are, much, much higher? Funny story, you guys know that Dan has been doing the morning show this week because Todd is out. Dan was telling us this morning, we're making a joke, and I found this meme of a little package of meat, like the size of like your thumbnail, right? And it's and the title of it is, I picked up a $10. I picked up a $10 package of meat, right? And it's like literally the size of your thumbnail, right? And he was joking, and he said that his bill for food from last week till this week was like $170 versus like 100 or $240. But he did admit afterwards that he had 3 additional things of celery on there, but the 3 things of celery probably don't justify the $70 price difference in just a week. So again, they love to take, core and retail is definitely something that's interesting to talk about. So you guys know what the core is. It excludes, this is retail sales excluding automobiles. A lot of times when you see core, it'll take out energy and food prices. Kind of gives you a little bit better of a gauge, but overall the retail sales, again, not quite as high. So yeah, that's where we're heading to. All right, so that's it for the week. As far as big other news out there, this is a big one that's been coming up. That the process of opening up banks, contractual amendments, yeah, precautionary basis. One is euros, one for rubles. So we've seen this go back and forth. The EU and the United States basically put sanctions on Russia for invading the Ukraine and basically eliminated them from the Western banking system. Froze their accounts, have taken their boats, and it basically eliminated them from being able to process things in Western currencies. But then expected to pay for oil, and Russia says, okay, fine, we can't access those funds. You've taken those accounts and frozen those accounts. We can't take the money out of them. You're not going to pay us in those accounts because we can't use the money. So you're going to pay in rubles, or we're not going to give you any more gas. And everybody was quick to say, no, we're not going to do it. That's a contractual breach. Well, it's funny now that they're like, hey, you're going to pay in rubles, we're not getting it, and now they're paying in rubles. So starting to see that. That's kind of one of the first big things in there that they're not cutting themselves off yet. A couple other things the ECB has mentioned in a 25-point rate hike in July. It's the first one we've seen from them. Again, they've been using Ukraine as the excuse not to raise, so we should be seeing a little bit more European strength kind of come into the market. It's still kind of a little bit of an issue, right? But not too bad. dollar knocked down. The dollar knocked from 20-year high as one slides as well. Yeah, a little bit in there. Bullard made those comments. We heard those before. The Beijing lockdown. I do have this up here. So this is another one of those things that is a cause of worry. We had 8.5 million barrels extra last week of oil. Beijing is locking down a little bit more. They're getting a little bit wider, right? But this is coming under the same guys that Shanghai is now finally and you can see right here the last line. It says the added restriction come as Shanghai, China's largest city, slowly starts to ease its citywide lockdown. So we're seeing oil at 115. The largest city in China is starting to release their sanctions. Not sanctions, their restrictions. So you're going to see demand also increase a bit over there. So it is a bit dangerous. I think oil again. This adds into the fact that oil could potentially get all the way up to, I don't know, 120 this week. It's kind of scary. Um, but besides that, that's kind of it for the day, right? I mean, not more. I mean, Yellen, but she doesn't really move the market anymore. The Chelsea Football Club sale hit snag over debt issue. Again, people are trying to, this is again talking about what is it? Is it Roman Abramoff or whatever his name is? He basically gave up right. He's like, I'll sell the club. It's not right with everything going on, even though he's very, very against, right? Very against Putin. He was considered being able to profit. So he was a sanctioned guy, and he's like, I'm trying to get rid of the club. It's the right thing to do. The club doesn't need to pay me back. It's okay. But again, there is debt owed, and the banks are like, well, wait a second. If you owe debt, I mean, it's different. So it's causing a problem. But that's it. There's really not a lot of market movement out there or market kind of news that we need to factor into things. But we've had massive market movements, like I said, in the currencies. Pound dollar, this, and again, pound yen 292. So let's dive into the charts. And as always, we're going to start off with the VIX. So the VIX, interestingly enough, continued to push down yesterday. It retraced all the way back to kind of the start of the move here. And again, the VIX is not a supply and demand based kind of gauge. It is the volatility or fear index. It's basically, it's the volatility that's associated with the options on the S&P 500. Again, if you guys are unfamiliar with, kind of basically SPY options, I believe are the most traded asset in the world of everything. Maybe I think as far as numbers, not as far as actual dollar amount. I believe the dollar amount is still the euro dollar, but ES options are. I mean, it's huge. It's definitely by far the largest in the United States. So it's the fear gauge on them. Down 4% today. Everything should be solidly in the green, and that's what we're seeing. Now the dollar. What we were talking about earlier is you kind of see where the dollar started to slide, right? We started to slide right around here, right about 1 o'clock in the morning is when this started to happen. And then right around here, right when we hit 104 is where the European kind of banks stepped in and just hammered the dollar to the downside. I mean, there's no other way to say it. From 104 all the way down 70 cents, this is a big move. I mean, you can see here what, a lot of the moves look like. This is a big drop, right? Now, again, what was the cause of this? It could be Bullard's comments about not being as aggressive. I mean, if he was the main hawkish voice and now he's getting more timid, it's kind of showing that maybe they're not going to raise the U.S. dollar's interest rate as high as they thought, right? Well, because of it, we've seen a lot of movement. Here's what we saw with the ES. So for those of you that aren't sure what these black lines are, I'll explain it very, very fast. I guess I actually did this breakdown with my students yesterday. Basically, we talked about where the Globex highs and lows were. Great education piece for today. It doesn't really pertain too much. I mean, maybe it does. Let's see. That was 6 o'clock in the morning. Yeah, I guess it kind of does pertain for today. We can kind of draw the same thing, although it's not really 8. It kind of is in the overnight, but it's kind of not at the same time. We'll stick it there, just for education purposes. But anyway, what this is this is the Globex high and lows, basically the overnight pricing action out there. Again, this is why it's important to kind of understand what's happening in charts. And I brought this up before in the past, but we'll kind of break it down today. And you can see that it actually did it on the top and the bottom. One of the this is a very, very common retail trader strategy. Everybody thinks they got the secret sauce on this one. They're like, oh, guess what? I know what Globex is, and this is what I'm going to trade. Basically, what this is it's the high and low in the overnight session. A lot of people will tell you, quote, experts, oh, when you break the low of the Globex, the Globex low, right? That means you're going down, right? It's going to be a downtrend for the day. But you can see the trap that it caused. The second it broke through and every single one of these people sold it, bam, it immediately popped up and stopped them back out again. And same thing, when it finally broke out the top, it had rallied all the way back from 1030, right? Awesome job. 10:30, 10:30. Yes, we finally broke the Globex high. And all those people that bought because we've been in uptrend since the open, really, they got stopped out as it got slammed right back down again. And then we kind of ended the day, down here with really no movement. It's kind of set up the same way today. So again, it's up 1.4%. A lot of it is up from where we closed yesterday. It has pulled back from kind of where the highs are. I think if you're looking for positions right now, and again, it's not always the best time in the afternoon at 12:30 to kind of do the analysis, but as you can see, it is a level. It was tested. It's something that you should watch out for. With any type of other negative comments, again, we know that Powell is speaking today. Could he talk about, yes, we need to control inflation? Inflation's out of control, right? Maybe today is the weird day, right? The aliens, maybe the wrong alien got into the wrong body. Maybe the hawkish alien is in Powell today, and at 2 o'clock when he talks about inflation and how it's out of control, because that's what he said, maybe that provides a bit of a selling opportunity. But if so, again, on a purely technical level, okay, it is kind of a 6 o'clock in the morning high. It did kind of bounce and then drop through. It did come up and test that level, showing us that there are sellers there. It pushed down and then, as always, where did it turn? 10:30 in the morning, right there on the red candle bottom, which was technically like kind of a Globex low right there as well, right? Kind of. That's back to midnight, so it's kind of a harder one to draw. But as you say, 10:30, we talk about it every week. 10:30 reversals where it turned and came back up, and we're about 9:30 is right here. We're just about where we opened, maybe a little bit higher than where we opened versus where we were yesterday afternoon. So I would say 40.7350 if we can push back up into that level before Powell speaks. There is definitely an option to say, hey, listen, Powell's probably going to talk about inflation and how it's out of control because it's out of control. If he says anything hawkish because it's been like weak dollar all day, that he's going to talk about raising the next two times. If he makes comments like Powell said that says, hey, listen, we're look at the market, man. We're not that far off, it probably breaks. But if he does talk about inflation and he does mention it's out of control and does give us a hawkish tone today, could be a really, really great shorting opportunity from 40.73. You can play this with, a couple different contracts. You can do binaries, call spreads, or knockouts on that one. So it's there. NQ. Okay. NQ looks very, very similar. This one we had levels. We've had these levels up here for, I don't know, days now. We talked about getting up into the 12,495. Without a doubt, yesterday morning I talked about this in the YouTube session with Dan. Like I said, Todd's off this week, so I was with Dan with that one. But did the same thing. I'll even pull these back just to make it a little bit easier for you guys, because you can see 6 o'clock in the morning. Same top, there's your base, there's your touch, and it looks very, very similar to the ES where it's kind of pulling back up into a tested zone. We had already had those levels marked off, so you guys should have already known about those levels short, and you can see that the orange comes above. So it was an easy, 1-to-3 risk to reward ratio based trade. Again, you could have taken this one off the open. This is what it looked if you only watch during regular hours. There's your 1-to-3. Actually, there's the 3-2-5. 3 is right there. So your trade is out, and magically, where did it find its bottom? 10:30. Oops. Nope. There. And there. There's your 10:30 bottom. And again, that should have been your profit target first more than anything else. And it's pulled back pretty much to where it is now. But I would say kind of the same thing. Again, the refined level is what, 12,503. So again, really that 12,500 range. We're about 25 points from it right now. If we get up there, could that lead to some selling? If you believe that Powell is going to say something about inflation being out of control and high, yeah, probably. Oh, by the way, speaking of that too, we've mentioned this in the past. We've talked about how, is the Fed really, how political has the Fed gotten? And I guess CNBC did a poll yesterday where people were trying to say, basically asking, do you believe that the Fed has gotten too political? And it was funny that like 80% of people said that the Fed's not political. And I don't know if they felt like that was their opinion. And one of the announcers, he's like, even Powell has said that is it a political body now? That politics doesn't control it, but it's not necessarily independent. So it was kind of funny that he was like, even Powell said that. It just shows you, the listeners of CNBC aren't always, 100% sure what's being told. But yeah, so 12,500. YM. Looks very, very similar. We had a level here yesterday. Again, talked about it. This one actually did pierce just a little bit tiny through it. But had you taken more of kind of a close proximity of it, again, you'd use the top of this area right to where the base is, and you can see it came up and touched it at 9:30 again. Kind of the third one that had an opening plan. Again, had you opened it up, it was right there at 9:30. And again, obviously, I don't need to draw it. Obviously, a 1-to-3. Again, this one too, that was out there super quick. This one, I'll draw it real quick. Just won't take long. Right. there, and 1 to 3 is down to there. So again, right where it should have. This is where that kind of you would have wanted to make sure you got your profit. And again, it is a base. It's got the same base in there. And again, 1030. Yep, 1030. Yep. Oops. There's your 1030 reversal. So right now, I like this one. It has a little bit more room to run. And again, up to 32,600. Pal doesn't speak for another hour and a half. So this one, maybe the down moves a little bit more. The retail sales numbers were a little bit mixed. And Dow is the weakest of all of them today at up only 0.92. But I think 32,604 would be a decent level on a purely technical basis. No opinions involved, no PAL speech. Seeing that this is confirmed, that barely touched and then exploded off of it, that tends to be a pretty nice one, right? So again, 32,600. Russell also driving higher. Now, it's funny to see the Russell move. Now, we had talked about this level, and we had 1, 2, 3. We already had our 1, 2, 3, and 4, right? And then 5 obviously didn't hold it back. Typically, it will not. So let's remove those now. It did come back and kind of Harry Potter off of it. It came up at base, it came back, it used it, and then took off on it. I'm going to delete it now, though, because we don't really need it. Let's see how this affects things. Okay. So, let's see. We do have a level here. Again, this is a level we've had a while ago. There's a bit of a gap over here. This was from May 6th. There was a bit of a gap down, and we touched it and kind of really took off, and that's why we originally had this 1828 level, and that's where we kind of came to over here. You're seeing kind of a similar scenario. We're kind of smashing into it right now. We know that there's sellers there. The Russell is the strongest right now, up at 2.47. Again, this is kind of going back to that. Hey, listen, did Powell turn weak? What happened? Like, oh God, right? If Powell gets weak, it's kind of like indices like, yo, we're gonna go. we're let's go. Right? There's no reason for it not to go any higher. Right? If they're not going to raise interest rates, they're not going to crush it down. They're not going to make lending more expensive. It doesn't get any better than that. That's basically like free money again, right? If we're capped out now, we're gonna like, oh, you know what? We're gonna stop at 1.5. That's all we need. That's a joke. 1.5 is a joke for businesses. So again, that should rally these things. But again, any type of a hawkish tone, it's kind of in the same setup as all the other pairs. That again, ideally we haven't broken through the top of this by then. And again, it may have already, it may already take off before then. But there's our 1 to 3. It's below. It's kind of where you should be, right? Profit wise, if we touch that one. But again, keep that one on your radar. And again, none of these are trade recommendations. They're just areas where we've seen sellers come in the past that potential trade setups can come from. I wouldn't say that one of them doesn't necessarily look better than the other one. They're all about the same type of trade. Figure out the asset class that makes the most sense, and then again, do some analysis. Look at the different products that Nadex has to offer and see which one is offering the best risk, because they're all printed at different times and the numbers may be slightly different, and the strike differentials are all different as well, right? To see how far they're printed across. Find the one, if you like it, that makes the most sense. And if you don't like it and you don't agree with the analysis, then don't take it. Again, any trading decisions that you make are your responsibility. So it is what it is. All right, so looking at some of the other things out that are driving this, again, Twitter gap down is going higher. There was a lot of news this morning about Elon is not going to take Twitter now. Again, every hour it changes, it's different. He kind of rolls like I don't know, one of those like 8-sided dice or whatever from Dungeons and Dragon. Am I buying Twitter today or no? No. It was down, and then Tesla shares are obviously surging 3.9%. Again, a gap higher, came back and then kind of pulled and went through. Again, basically, Tesla shares were surging because he wasn't buying Twitter. Now it's kind of slowing down a little bit. Apple's up as well, even though China's locking down. So it's all good. Let's go into currencies pretty quickly here. So we had talked about a 70.43 level. This is a level that we've mentioned. It's been up there. It was right around a 50% retracement level as well for fib, so kind of confirming the supply and demand area. Yeah, we missed this one by a little bit, and you got to hate when this happens. And every week, there's always one or two of them that I'll mention and be like, yep, we missed this one. And again, there are things that you can do to miss less, but it also increases your risk, which I do not like. In this case, we missed entry on this one by 3.5 pips. So 3.5 pips I missed it by. The spread on this one is 2, so I missed it by just over what the spread would be. It happens. It's pushing back to the downside as we speak now. There is some interesting Australian data on this one. I don't need this level anymore. That trade is out. Um, that one's done. That one is full fruition. So let's take some of these off. That went lower as well. Do I need that? Yeah, that's going to be a target for us. I can delete that one. All right. So looking for kind of hidden areas. Again, Fib people will love this one. You know, if we go from low to high in Fibs, you can see that there is a bunch of chopping around, and it was an old 23.6 level. It is a little bit high, and again, a lot of people use the 50 and the 61.8 as their two levels as far as entering and where the risk level will be. Again, using that same level, I mentioned that that was kind of a target for us, right? So what I would say right now is the one thing that I'm kind of looking at is there's a level of stabilization right here. We just kind of bounced off of it. It is at a 23.6 level, so again, not necessarily surprised it bounced from there. It did not hit the 23.6 level, so if you're purely like a black and white, like, okay, when it hits the 23.6, I'm doing this, you missed the trade. You didn't get into it. It has pushed up a little bit, and we're kind of seeing what's happening with the dollar weakness. I would say, you know, for me right now, I feel like Powell has to talk about raising interest rates, what it has to look like, and how much further. I feel like I don't know. I feel like if his speech is very, very dovish, which I feel like because we got the other comments this morning, I feel like today would be a day that Powell would get a little bit more aggressive in his speech. It should be more of a down base trade. Now there is a small basing level here, and this is kind of my one kind of hesitation to talk about this one. But if price is able to kind of bounce through, we could get a kind of a short base trade out of here, coming through 69.86. And again, it's a level of basing. It's been hit. We know it's confirmed sellers. It may bounce off of it one more time, but if it's able to come through in base, especially with Powell speaking, that could be a decent level to drop. And you can see we got this here. And again, it's a little level. It is tested. It's rather small, though. I mean, we're talking about 4 or 5 pips, right? The overall entire area is really kind of pushing back down to about 60 pips. So there's a lot of potential in this one. But we really kind of need, again, for those of you that know what it is, a Harry Potter based trade coming 70.86 down. If it comes down and bounces right off of this level, would not be surprised in the slightest bit. And then when it comes back up again, that'll give us the trigger, especially if it pushes deep into the zone for it to drop all the way lower. So yeah. So it's there. I would say again, this is up a lot. It was up way more than it should have been. Right now it's only 73, but it is above an ATR. So I think again, we're looking for shorting opportunities. It was unfortunate when we miss it by just a little bit. Again, 3 pips is like nothing. But it happens. It's not fun. You never like to see it when it happens, but the reality is it happens. Okay. Also, yen. So Aussie yen kind of in a similar. Now, yesterday we talked about 90.06 being a level, and you can see we had our one touch, we had our two touches, and it did hit a third time and came to about a 1-to-1, and then that's it. Right after that, we're not interested in getting short anymore, and you get out typically. It came up and it based in there like we talked about. It did come up and it pushed down, right? It came up and it was very, very fast. It kind of missed the Harry Potter entry here and then came and touched it and took off. So, again, this doesn't matter anymore. We've hit the 78.6. I know some people that will still use the 78s. I don't. But right now, again, if we take this old level and kind of refine this a little bit, that's showing you that right now we have some sellers, or I'm sorry, we have some buyers sitting at 90.26 right now. Again, it is an old level. It was the new bottom. It did come back and kind of got front run a little bit on it, but you can see right here, again, the 23.6 is a popular level where people will step into it and say, hey, listen, for a trend continuation, I know I'm supposed to buy or sell on the pullback. Here is a defined level that's Fibonacci because, it's the force, right? Nobody argues with the force. And again, 23.6, right? Um, that's where it is. So 90.26 again, probably a decent level. And again, I would say that this is probably a decent trade. Again, we've seen dollar weakness, we've seen yen weakness. If Powell kind of starts talking, we could obviously see a reversal in both those pairs. And again, the Aussie follows; it should run back to the downside. And I think overall, looking at this down below, you can see that there is a confirmed level right here, a base, a pop, and then boom, it touched and then took off. Also happens to be sitting right around the 50. So I would say downside. You know, looking for targets, look for a target down here at 89.43. Okay. All right, euro pound. So you can see euro pound. We had our target. It actually blew through the target, came back up, and now it's laying right on top of it. Funny enough, right? Funny enough. Okay, yesterday, and I did this for my group. I didn't do it for you guys. Yesterday, I talked about different possibilities for the euro pound. Okay, I left this here, and again, It's one of those things. Every week I talk about knowing your products and what the potential is and kind of looking at them and analyzing them. Here's a position, and yesterday we were kind of sitting in this area. Actually, yesterday morning would have been right around 10 o'clock, right here. Okay, I was talking about a drop and where the target was, and we knew we had some pound speeches coming through, right? We had some pound data coming there, and we had seen a lot of movement for the morning already, and the way that it worked out, it was like, wait a second, there's kind of a cheap binary here, right? And again, there was some risk to it because, again, at the end of the day, what could happen? But you guys see how this one worked out? In this one, there was a binary contract lower that had about $14 worth of risk. And we kind of targeted, like, if we could get it to at the money, right? If we could sell it right now and put $14 at risk, but take it off for about 50 bucks, right? Right? $14 worth of risk, getting off at 15, you're at that like kind of like 1 to 3 ish, right? 1 to 3 ish risk to reward ratio, right around there, right? Those are pretty nice little trades. As you can see, this one ended up coming all the way down and closed actually right below it. So again, all we were looking for was at the money, and it basically got down there at the end of that time frame. So again, just one of the examples of understanding and looking at the different products and seeing what the news catalyst is going to be. This is one of those ones from yesterday, so not horrible. From a chart school. And after that, I continued to deteriorate and went down and down and down and down and down. I mean, it got really, really crazy. We tagged the downside target. Now we're sitting actually up. And again, I'll remove this target. It's sliced through this. It's kind of riding along the top of it right now, but we're going to remove it. Right now at the 23.6, we just talked about kind of pullbacks. This is a pullback. This is where you look to go, you look to go short. You may say, well, why the heck will we go short at this point, right? Like, I mean, look, it's rallying, right? Well, here's an area of basing. It's hit it. It's hit it again. The sellers from up top have really the sellers that existed up here have really kind of slammed it back down again. This is a parabolic move, right? This is about 44 pips to the downside. You may say, well, what would be the catalyst? Like, why would it do that? Let me show you right here. 1 to 3 is only right there. So again, well within your range. Here is exactly why you'd be looking to get short this position. The forecast for CPI is 9.1. Okay. If you look back to see what they were before, last time the forecast was 6.7. They missed it by 3 points. So unless they make a major adjustment, what happens if this is a 9.2 or 9.3 or 9.5? Right? I mean, if you look at this, we can go back to here. 4.8, oops, they missed. 5.2 is a forecast. Oops, they missed. Oops, they missed. Oops, they missed. Oops, they miss. And again, when you click these, it tends to be more green than red. So if they miss to the top side, and it is a 9.3, a 9.4, a 9.5, that should be every more reason that they're going to raise interest rates again because things are getting out of control, which strengthens the pound, which also leads to a drop in the euro pound because the pound's in the second position. So this one, again, I'd like to get a confirmation entry if you can. The news isn't until tomorrow. We'll see if we're able to hold it. It may actually push all the way down there ahead of time, but it's a break of 84.35. Again, the market doesn't need the news to actually do it. It's just a market perception of what it's going to be. Could be a decent trade. And again, could we go even lower? I mean, we have another Harry Potter down here. It's still an active piece. If we push much lower down here to the 83.66, could it go even lower? Yeah, I mean, technically, sure. That's another trade, and we were looking for targets down to 83.29. So there's a lot of data out there for the pound in the next 24 hours. So again, take advantage of that. Look for some of these contracts. Again, this one actually may trigger and be done before the end of our day today. If so, kind of see where Nadex resets the contracts and what comes of that afterwards. There may be some opportunity that we can use after the Nadex. After Nadex is reprinted for the day. Now, euro yen, unlike the euro pound, is also going up. We talked about a level of basing right here that was a strong push off of, and it based before it, hit it, and kind of dropped. And it's kind of like, well, wait a second, are you running out of steam? You came back down, and you're getting more buyers right here. But if you've run out of steam, this thing could rally and really kind of roll and push back to the downside. 1, 2, 3, yeah, we got that area here. Really, I mean, this is the next kind of confirmed level is right here where we touched it. There's your first area of confirmed sellers. This is a pretty decent run down. 223 pips to the downside in the euro yen. And pal speaking, the same kind of. I'm happy that this is higher. I think it's justified. Talking about, hey, listen, that's it. July 0.25. We're doing it. We're pulling the trigger. It's time to make this happen. Makes sense that it's high, but they haven't done it yet. It's not officially in yet. Could there be any more problems for Europe? Answer is probably. So again, my thinking on this one is maybe now is the time. If you guys wanted to kind of move this one just a little bit. Let's see, where would I put it? I like this level, but I almost want to kind of just say, hey, listen, there's a base right here. We know it's a problem already. A 1 to 3 to the downside gets us a little bit extra confirmation. You kind of want to see that, a color shift at the top, right? The target right now on this one brings it back down to here. Yeah, there's some buyers in there, but it wasn't explosive movement, so it's probably pretty safe. Um, you know, could be a potential short area, an area where you want to be out by, but I wouldn't say that it's anything that's just earth-shatteringly bad, right? So again, if you're looking for more confirmation, I mentioned, how, what is it? What does the a color shift or a color change look like, right? Very simply, what a color change looks like is a red, a green, and a red that closes below, right? It looks like, um, unfortunately, they move too fast, but right, something like this: two red candles, a green pull up that didn't go above, and then a red closing below. So this four candles right here. When I say color shift, this is what I mean. You have those two reds there. Oops, sorry. Those two red candles. The green, it didn't go higher than the red, and then you have a red close below. A red, a green, and a red. And again, confirmation of continued short. And you can see what it did after that. So with one of those, or a close below this level, again, could be a decent short level, right? And again, just happens to be at 136.00. So again, psychological level there to be able to take advantage of. Euro pound. I'm sorry, euro dollar. So euro dollar. Every time we get down here, and again, we talked about profit targets low. Every time we get down here, it's like, oh, it's going to parity, and then it's like everybody steps in, like it can't happen. It's so close. I want parity to happen so bad with the euro dollar. We rallied up, and again, the dollar just got smashed today. You can see that it did hit a level 6:30 yesterday morning and went about 2/3 of the way. Ran into the same buyers here, and then kind of came back up. Probably stopped you out of break even in the real world, or the outside world of Nadex. With non-Nadex contracts, and then just kind of hovered and was fighting, fighting, fighting. And we knew that if we broke through the top, we knew we had nothing over here slowing this down, and it didn't. It kind of came down, got a little hiccup, and then finally burst through, came back and used that 105 and went higher. So my thing on this one, yeah, it's great that the euro wants to do a point, a 0.25 raise, and it's great that they're finally starting to take the steps that they need to try to attempt to control inflation. But I do say but on this one. The United States is talking about we're going as a point 0.5 next time. So if you're talking about actual legitimate strength, I mean the United States, I mean I guess if we're going to do one more and we're done, and every single thing we've heard from the Fed in the last 6 months has been a lie about how we're going to do 5 or 6 raises next year, and then it's like, well, we're going to do point 0.5, right? We're going to do point 0.5, and we're going to do at least two more. And now they're saying that, hey, the market thinks we're not far behind. I don't know. I would say everything we've mentioned thus far has been that Powell's going to be a little bit more hawkish today. That should also bring this back down again. So if we can get a decent top in the next hour, hour and a half, this could be a level right now where you're saying, hey, listen, I know we got some basing right here. You may look at this and say, hey, there you go. Look, we boxed it exactly. I know this is I feel like this is the top. We got from where current price is, we got about 40 pips to go. From the last time it pushed was down here. That's about 60 pips to the downside. There's a little hiccup that it used at 105. Do you look to get a short position on this one? You could potentially look at it. The same thing that I did yesterday with the euro pound. You could absolutely look at the same thing and say, hey, here's an out of the money contract. Um, you know, maybe we should for this one to come back down. Like everything that we're going to see for the rest of this week. I mean, we have some monetary policy stuff coming in. I mean, all the European data is out there at this point. Maybe we look for maybe like a knockout or something close, right? Again, binaries typically you like to take the shorter duration contracts, but is there going to be enough time for it to retrace down to the level that you need? Is the big question, and the answer is maybe, maybe not. Um, but like I said, Pal is speaking. He can do a lot of crazy things with the market. Um, you know, it's a very interesting question if it has the ability to move. And I would say that, again, I personally, I'd like to short on this one more than anything else. Finding the correct entry, finding the correct product is what matters the most. Pound yen, it's flying. We talked about this one earlier on the early morning session. We literally 1 o'clock in the morning, it took off. It blew through 160, kind of paused a little bit at it and then jumped. The two targets we had talked about before were the 161.34. As you can see, we hit that one and pulled down again. It started to build some momentum, find some buyers, punch through, and now it's looking for more, but it's starting to fail at this point. At this point, although we didn't hit that top level, there's kind of the new level. We're bouncing off of it. I kind of am also in the short bucket on this one. Not that I think that the pound is weak, because I think the pound is still, today is definitely a pound strong day. But can the yen get some help from Pal speaking? And I think probably it could. We're up 1.5% on that one. In 24 hours, it's moved 305. That's huge. I mean, the daily ATR on this pair. Whoops. I don't need 1 month. Hold on. 1 month. The daily ATR is 206, so it's 1.5 times, and part of that. I mean, you can see that the ATR is kind of inflated right now. The normal ATR average is about 150, so it's about 2 times. It's just we've had some big days in a row here, and you can see it's definitely a big candle. So I'd say I'd be looking for a reversal, particularly with POW. And again, I think the euro's a little bit better. The euro dollar is a little bit better to trade, but again, kind of the same setup. Pound dollar looks just like the euro dollar. And again, if you want to know what these lines are, again, go to YouTube, watch our session from this morning. We talked about Bollinger Bands and how we talk about, how there's the pinch and then the explosion. This is what the pinch looked like, and then this is what the explosion looked like in this one. About how wide the outer bands were. We're kind of pinching again. Again, we're on a 30-minute candle. You can see there's an area where it's running into sellers. Again, it's made 2 attempts and there's been a support, but this is a parabolic move. Any profit targets in this one need to be out by here. I'll delete these two real fast. So could we be in the same scenario? Powell says something extremely hawkish. We have profit taking coming in. People are selling this one, and we see dollar strength return to the market. I'd say it's probably a pretty high likelihood. I don't know. Maybe Powell just completely destroys the dollar today and just is like, I told you, we're doing a great job and we don't need to do any further raises. Maybe. I really hope that's not what he says, but you never know with Powell. But right now, if you're trying to stack odds in your favor, I feel like it's more of a short. Dollar CAD. Dollar CAD is actually rather tame. It's moved a decent amount, about 56 pips now. It was 100 earlier today. It's kind of retraced a bit back to where it was before. And again, in the 24 hours, really yesterday at about 2, 3 o'clock, it had stabilized itself, and we've been in the same area, and it's been there. Target was hit, pulled away, base kind of tried to pull back. Didn't actually give us a Harry Potter entry for it. But right now, we're looking for this one to come lower. I'd say interesting level in here, right? You can see here that prices pushed this area twice, and that's kind of what we ran into. Below this, we don't really necessarily have any crazy, whoops, not that. We don't really have any great kind of buyers or sellers. Actually, just do it this way. This is kind of the next level right here of where we're looking price to go down to. I would say right now, I don't think we're going to be able to get there before Powell speaks. It is about 50 pips away. If we were able to, that's actually not a bad area to be able to take a long off of. So I'm actually not against that level. I think that's a pretty decent level. Again, it pulled back, it based, and then boom, it shot off of it. And that shoot off was right at 9:30. So it was a U.S. session open kind of push. I mean, really, there's a level here, a level here, a level here. There's 3 on top of each other. So, just a little bit lower. I think we do have some decent opportunity in this one. I do think that the dollar CAD is probably justified to go higher. We do have Canadian data this week, so there is the opportunity for Canadian strength to come back in. Right now, though, a lot of this is probably heading down because of oil, because oil is up at 114 right now. So thankfully, it's pulled back, but not as great as it was. Here's the dollar Swiss. So dollar Swiss may actually have its bottom in already. Again, we talked about this one. Whenever there's a pullback, look to go long again. The situation is not great for the Swiss. Today was about destroying the dollar. Where it turned right now, again, if I pull this all the way up, we'll go to the high. You can see it's kind of in between the two areas. If you take kind of a more near-term low to high in here, you can see that it kind of came down and it paused a little bit to 50. The 61 didn't affect it, and it kind of ran into something down here. And there is a little, here, I'll delete this so you can kind of see it. There is a little tiny bit of a zone, right? You can see it kind of right here, right? And it's hit it there, and it's hit it there, and that's what we're fighting right now. Because it has moved so much, it is outside of its normal range. It's moved 83 pips. The daily ATR on this one is not that high. With Powell speaking, again, it's kind of set up more on a technical basis for him to say something hawkish to also continue this one higher. So right now, my idea would be to kind of look for this one long. How far it pushes, that's another story. But I'm just feeling that, this could be a great buying opportunity for the pound. Now, dollar yen doing really absolutely nothing. We're literally kind of bouncing back and forth. We talked about the 50. It bounced off of it, bounced it again, bounced it again, bounced it again. But again, it's higher lows, lower highs. We got a little bit of a push forward, and then kind of we're back in the same spot. So it's really doing nothing. It's moved 27 pips now, and that looks awesome, right? But you can see that it really hasn't left. There's really no opportunity in this one. 129.84 is the next level up top, and kind of the bottom side of this one would be 128.67. So not too much there. Now, oil we mentioned. Oil again rising. I thought I'd carried this up already. Right now, yesterday Yesterday morning, I mentioned if we had to break a 111.68, it's go time. And it did. It kind of went through it based right in that level. It's like, yep, it's go time. And you can see it went all the way up. Today's high was $15.56. All right. Right now, I would say that, again, oil has kind of found its stabilization around 114 for right now. I really don't want to see it any higher. But the reality is on this one, if we do top to bottom at the 23.6, you can see that there is a base, and this is actually in the old level right there, and it happens to be at the 23.6. So extremely intraday technical based traders are going to look at 111.96 and say, hey, this is a 23.6 pullback. It's going higher. We got oil inventory. Remember today at 4:30 we had the oil inventory, or the API oil inventory report. So there is actually something to trade later on today with it. Natural gas. Yeah. So natural gas, we had two levels. We talked about the 819, and you can see we kind of got front run on over here, kind of hit it again, and we're just basing, right? And it did go higher. It did grab that next level up, but we're still stuck in that same level. Um, Again, these are all upside targets. I mentioned before, I don't really, for me, there's no data out there right now on a fundamental basis or a technical basis, really more on the fundamental side, that would lead me to believe that we are ready to start shorting natural gas. Um, Trust me, I am the most biased person in the world. I'm getting ready to. I'm ready. You know, you guys know this is the time of year where I do start filling tanks up for the year. I'm looking at this and going, "Wow!" The joke last year was that I was going to have to pay $650 for it. This is $825. I am definitely not doing $825. I have all the bias in the world to tell this thing to go short. Unfortunately, I don't believe in it. I do feel that this has the ability to go higher. I really don't want to see it this high, but I would say right now, if we can stabilize ourselves here and start doing the same stabilization in this red zone, I hate to say it, but $8.89 is back on the table. So not what I really would like to say, but I got to give you guys the truth based off of what the charts tell me. Now, gold. You can see that gold also at really 1 o'clock in the morning, right here, it started to kind of gain some ground. We talked about this level of 1815. It hit it here. It hit it here. There's your three hits, and we're like, okay, if it pulls back up, this is a no go, and it didn't. It based in here, and you're like, okay, now I got to go long. It didn't give us a pullback. It just came back down again. With Pal speaking, I think that this one is also set up for some type of a short. Do we use it off of that 815? We may have to, but I think if we look to take gold short, again, this is we prefer to get that confirmation in, and the funny part is the 1 to 3 just happens to come right down and hit the 1800 again. Right, that's the 1800 number right there. So yeah, that's where your 1 to 3 is. So we'll see what it does in the next hour. Right, he comes on at 2 o'clock. If it's able to push it and start basing in here again, I kind of feel more short, but you never know if Powell's going to surprise us. And then we have silver, last but not least. Came up, based in at 2150. We knew that was going to be a big problem child. It came back up and is poking through the 50 right now. We're really looking for this $22 figure up here up top, and really the zone of that one starts at 91.59. It came up to I'm sorry, not 91.59. 21.95 is where the zone starts. The price earlier came up to 21.91, so I missed it by 4 cents on that one. It was in the range. You just needed a bit more of a buffer, but I would say also gold has already turned and rolled. I believe that silver is also probably in a similar situation. Cryptos, they're up a little bit above 30. Again, not much, but they are positive on the day. Even the meme stocks are up 4% today. GME 130, not much. Even Dogecoin is in the green today. Bonds are about the only thing because again, it is risk on, so bonds typically are going to react in a negative fashion to that one. So again, look for Powell speaking today. Could provide some great opportunity. You have wage prices. You have oil tomorrow morning. You have CPI. 2 o'clock in the morning could be a big overnight pound mover. CAD CPI, again, tomorrow could also bring some strength or weakness into the CAD. Aussie tomorrow night. And again, Thursday, not much. And then Friday, we have, elections and retail sales. So a lot of stuff going on. Some pretty decent, opportunities out there. Is it the most economic release based week? No, not so much, but a lot of headlines out there. I'm just hoping that oil starts to turn and flip before this full brunt of summer gas kicks us, because I was really pulling for, like, I was swayed, like they convinced me that $100 oil would be okay. But yeah, 115 is not what I'm looking for, so we'll see. Anyway, with that said, I am out of here. If you guys have any questions for me, make sure you mark your count. Or go ahead and email me. Mark your calendars for next week, May 24th at 12 p.m. Here's my email address if you have those questions, support at keeptradingsimple.com. Thank you for joining. I'll see you tomorrow morning, or if not, I'll catch you next week, and have a good trading day. Take care.